Hi, in this video I'm going to talk about some changes in the intraday section of Emini.Today. Specifically, I'm going to talk about the ES intraday section here, and what changed and how to trade it, like which tools to use and how to use them on a daily basis. So let's get right to it. And first of all, we have like two parts, like two major parts, two major tools that I'm using every day to find a good opportunity. And the first one is this structure, the ES structure, which is the same as this one. The difference is that this has a price chart on it, so you will see like less to 100 minutes of the RTH session, so the US session. And over here you kind of just see more of the levels and the price just going up and down here, but we'll get to that in a minute too. So basically, the second part, the second tool, which is kind of most important, is the one that I came up with recently. It's these are these so-called order flow pivots. I mean, I know that TikTok is using that term, so I kind of wanted to emulate this, but although many times it's like to detect the same what he posts, I can't be sure that this is exactly the same formula or the same method to calculate this. Anyway, we'll get to the order flow pivot soon. I might actually change the name for something else, something more fancy. I don't know. So these yellow lines are the most important, right? These yellow levels. What it is this is what I call the implied volatility expansion levels, combined with some order flow and time on sales events, and it makes sort of a grid of support and resistance based on some very I shouldn't say basic, but kind of a basic implied volatility model derived from options. It's not like 100% Black-Scholes, but it's a bit modified by me. I guess if I would use Black-Scholes model, it would be like kind of the same, probably. So the first thing you want to do is when the market opens at 9:30 New York time, so the session starts, you want to see what the price is in relation to these levels. So let's say that the market opens over here, right? So it's kind of like 36.75, and the first setup that I use, like it's like bread and butter, everyday setup that I use, is going to be trade off the first level that is tested, that is tagged after the market opens. So if the market opens here and the first level to be tested is going to be 3320, then I want to be long over here, right? If for some reason the price is going to go after they're open, the first level that it's going to be that is going to be tagged is going to be 3370, then I'll go short on that level, right? So how I build my position is pretty simple and basic. Like, I want to go short. Let's say that this is the level that is hit first, and I want to get in with first part of my of my order with on the first line, the closest one, the 3370. Then I want to add some the second part somewhere in between, and then the rest at 3382. Then put a stop, which I'm going to talk about how to in a minute, how to put a stop. And once I'm in, we'll set my two targets. So the first one is the midpoint. So it's between, it's the 50% of this range between the zones. You can see it also on the ladder here, the light blue lines. This is a midpoint. This is just a 50%. So I would scale out the first part and then try to write it down to the opposite zone. Now, the opposite zone is not the place where you want to inverse your position. Like sometimes it's going to work, but more times the price will just bounce a bit here, and might actually, especially in a down market, it might actually visit the second zone here. So it's not a good place to reverse a trade here. This is usually my target, unless I see something else, which we'll talk to about, like the option sentiment, which is over here or something like that. But we'll get to that. So this is like the very, very basic setup, and it's really simple to use. Now, I know that some people, like including me, they feel more comfortable with just entering with single shot, with a single, well, not scaling in. It's just get at the level, getting the market at the level exactly, put a stop loss, and that's it. And you can do this. But I would suggest that you go with the outer level. So if the first level to be hit is this one at 3320, then if you really want to be careful, not risk much, not scaling in, you can just set your order to go long at 3311, right? Somewhere here, and just with this one transaction, you go with your stop loss here, and do the same. So you can get out or scale out at the middle, or just close your transaction in the middle, or write it up to the opposite zone, right? So the disadvantage of this approach is that you're going to definitely have a bit less transactions. So because price not always gets to the outer level, so it will just stay somewhere here, just like you've seen here. So you actually could get in at this level, because this is a close price. It actually, the low of this bar actually tagged the lower line here. So it was like the perfect long, right? If you would go with one contract here, you would basically have no risk on it at all. Okay, so where to put your stop loss? So how do we even calculate the stop loss? So the stop loss is figured out on the basis of the bands too, because if you take the distance between this line and the corresponding one, it's the lower one here and the lower one here, it's about 60 points right now, right? It will change. Like the next 2 months is probably going to be more or less. I don't know what's the volatility going to be, but you can actually see it here. Like I'll get to that what it is, but you can see the number here. This is actually the distance between zones, right? So it's 63 points right now. You can measure it, like, calculate here in your head, or just look here. So my stop loss is 1/10 of this distance. So it's pretty reasonable to have your stop loss according to the volatility, and this measures your one standard deviation based on my model, that this is the one standard deviation. So 63 points is one standard deviation, right? So your stop loss being 1/10 of it, so like 6.5 points, something like that, is totally okay. So if you get in at the outer band short and it's 82, then you want to be out like in 88 or something, like 88, 89 max. You don't want to risk more. And basically, because your range is 63, you almost have like 1 to 10 risk reward, right? So it's a very, it's a pretty good risk reward for intraday trade. Or if you want to get out in the middle because you don't want to sweat your position, and you're going to be like 1 to 4, 1 to 5 risk reward ratio. So it's still a very good one. You can also see right here that there are these purple and dark blue lines. These are just what I call a minor scale, but this is something that I'm still working on. It will help you a bit. Like if you have other tools, and you will see that okay, you use, like, I don't know, some kind of a price action pivots or something like that, and you see that the level corresponds to one of these, then you might want to use it. But it's not a part of my my strategies right now. It's not like something I will directly use to trade off. For me, these yellow lines are, like I said, the one that I go with every day, and in relation to where the market opens every day. The one more thing that you should know about these lines: they do not work that well in overnight session, because during the overnight session is like there's like a lot more going on in sense of things unrelated to these levels and how they are derived, and we'll talk about it with the order flow pivots. So you don't want to use it during overnight, in the sense that you just I don't use it. Like some traders, some people in my group, they use it, but I'm like, I've seen too many times that these levels are just going to be broken during overnight sessions. So it's like, I think it's like 50-50 trade. So we had one really good one in overnight last week, but I didn't take it. Some people took it, and then on Friday, it actually, after the market opened, they actually took out the levels. So it will happen too. Like it's not 100%, but it's close to. I think it's somewhere between 85-90% that the price will be stopped on these levels after the market opens and hits. Tags the first one of these zones. Okay, so this is kind of a primary and basic setup, and the question is, like, can we make it even better, or can we add something to it which will allow us to have, I don't know, like more trades, or to have a more confidence in this trade? And the answer is I think yes, because we got this thing which is called order flow pivot, right? And it seems to work really nicely and really precisely, and even in overnight session. And that's why we have two of them. So one is the RTH session pivot, and the other is overnight session pivot, which is actually the same number. It's the overnight pivot is actually derived the same way, but it's extended for overnight a bit. Like that bit is actually based on the volatility, of course, on this very component. And I found out during the testing of it, during researching it, that they actually kind of like overextend the RTH pivot in overnight for a certain amount of points, and then they kind of activate some algorithms which will protect it and during overnight. So they let the price like move away from the pivot for a bit more in overnight than in a regular session. So so for now, the order flow pivots are not on the chart yet, because these will not change during the overnight and during the RTH session. They will just stay as they are. Sometimes, like in the middle of the session, I will give you a heads up in a community section on our chat room. I'll show you in a minute. Where is it? But it's still, until the session is ended, you don't know what the next order flow pivot is going to be for sure. You can anticipate that, yeah, this is the developing one, and probably this is going to be the pivot for the overnight and the next session. But until the session ends, you never know, because sometimes in last 5 minutes there can be so much action in on a tape that it will just change. So when you get to the community section here, you can see the chat over here, and here's the overnight order flow pivot and the RTH order flow pivot right here. So basically, once you get in here, you will find the numbers about the chat. I will probably change it a bit, so I will punch in the numbers for like last 5 days, and probably add something like how much juice is in the pivots, because what they are is actually based on the number of some certain events which took place in the order flow on tape and in orders during the whole session, and based on that I calculate where the pivot is. So it's a bit different than these lines, which are pretty much they pretty much won't be changed. But the pivots are different. They will change a lot from session to session, because they're it's a different kind of approach. So I'll switch to my Sierra chart to show you these pivots on a chart, because I clearly cannot do it here. But at some point I will for sure I will add it to the charts also here. But it's easy to add it on your charting platform, because these are just two numbers. And one is for overnight and one is for the RTH session. So let's go to my Sierra chart. Okay, here's the syrup. We have more of it. Yeah. So I marked the RTH and overnight pivots here. So you can see the pivot for today. The overnight one was at 33.15, and the RTH is going to be 33.21. So this is exactly what is in the community section given. And so, well, let's start with today. So right now we are in the overnight session here, and we had, after yesterday's regular session, we had this overnight pivot given at 33.15, and for the US session, the active pivot's going to be this one higher. So like I said, this is the same number. It's just that the overnight is a bit extended. It actually should be a bit 1 or 2 points more extended, but that doesn't matter. So the one thing that I've noticed today is that you can see these numbers here. Like I numbered it like 9, 15, 10, and this is what I call the juice in the pivot. What it means is that the number of these events that took place that produced the pivot can vary, right? So there was like 15 yesterday, and the 15 of them produced these levels, right? So this is the overnight. It was like to the tick, and then this is the regular session, and it wasn't tagged in during the regular session, but in the overnight we actually hit it almost to the tick, and the price just went through our overnight pivot, which is down here, and this pivot was just 9. So there was only 9 events during this session here which produced these 2 pivots. I mean, actually just this one. So what is important for me in this is that whenever I get this number after the session, so after this session, I knew that the overnight pivot is here, right? So the market closed below it, so we knew that that it's gonna be the bearish pivot, and I wanted to go short here, or during the regular session I wanted to go here, right? But it appeared that after the market closed yesterday and we got these levels here, it appeared, and it also corresponded with our yellow lines, right? Because we traded long yesterday. Here are the yellow lines, which I showed you before. So this was what, like, this seemed to me like a nice way to get in along. And then when the market closed, I knew the pivot was here, so I wanted to wait and trade into the debate, the presidential debate, but I didn't set my target here, and that's why I was fucked, and they just crushed through this pivot here, and yeah, I mean, that seems reasonable, that if this one has more juice in it than this one and wasn't visited during the regular session, that they will try to tag it, and price will react and reacted like viciously over here. So pretty much the same situation was here. So the market closed. We got our overnight pivot over here, and there was also the yellow lines here, and that was basically the same, the same situation as here, but to the downside. So it was a great short we took. And again, the when the price opened, the market opened during the RTH, it couldn't even like go more than 2 points above this RTH pivot, not even close to the overnight one, and just puked. Same here. This was actually the same pivot as TikTok posted. So it was the 32, 15, 16, and it was exactly to the point. This was the RTH pivot, and this was the overnight one. So the overnight one was like 2 points, went down 2 points further. So what I would do is I would trade the overnight and the RTH with a 3-point stop. So it's very small stop loss. So it's 1/20th of the volatility, one standard deviation, right? So it's basically really easy. You just need to get these numbers, and the price will always be below or above it. So you just set your orders in overnight at the overnight pivot, and in regular session at the regular session pivot. So like you can see right here that this was the pivot for overnight, and it wasn't tagged. I mean, for overnight was here and wasn't tagged during the overnight. But in a session, in a regular session, they just tagged it, moved down, and well, you didn't see it here, but there was a developing pivot already here, and so you could just take a loss here, or I gave a heads up in a chat room that there's a developing pivot with more juice, because there was actually like a 12, and this one was like 9, something like that. So this one has never been tagged, and I assume that this is going to work as some kind of a support here. So it's going to be like something about 32.69, and I think that there are also some lines there, some yellow lines there. I don't know. I gotta see. No, it's 57.50. So it doesn't correspond with it. But we'll see where we're gonna open today. If we're gonna open below this regular session, because this is the regular session one, right? We kind of like already bounced of it here, so we broke in it, and we kind of bounced off this pivot here. So if we open below it, and the yellow lines are also somewhere here, well, that would be for me the short trade, which I would take. Okay, one more quick and brief couple words about the option market, order flow sentiment, which I talked in a recent in a previous video, but there is some confusion about it. So basically, you got to understand that these options which I'm analyzing here are based on SPX, SPY, and ES futures options. So, for example, on SPY, you will have your expiration on Monday, Wednesday, and Friday, right? So, if, for example, if we are watching this on Monday, and this is Monday here, like the last couple minutes of Monday, if this is Monday, the most effect it's gonna have on the market is gonna be on for Tuesday and Wednesday. So for a Wednesday expiration. Now, if you're watching this on Tuesday, it's still gonna have effect on the overnight Tuesday to Wednesday and Wednesday itself. If you're watching this on Wednesday, the most effect it's going to have on Thursday and Friday. Same on Thursday. If you're watching it on Thursday, it's going to have effect on the Friday expiration, so on the Friday prices. If you're watching it on Friday, it's going to have an effect for a Monday price action overnight and RTH. Okay, so this is how you should read it, and really pay attention to the scale of these numbers. Like above 5,000, 10,000, 20,000, it's a lot. So it will have more effect. So for example, we had like on Monday, we had like almost minus 20,000 here on a volume, and value minus 15,000. It's a lot. And yesterday we had like minus 5,000 here. So it was like it was a really bearish sentiment going for Tuesday and Wednesday. Okay, so this is just one thing that I'm going to that I was going to explain. And yeah, I think that sums it up. I wanted it to be shorter, but it's much shorter than the previous one. So if you have any more questions, then just go ahead, go to the community section, and we actually talk about the trades that are coming up, that are going on, and yeah, it's fun. During the U.S. session, there's a lot of people here, and we try to help each other, or just have fun. So, okay, take care, and hope to see you soon, somewhere here or on Twitter or whatever. Bye.